Hello, this is Dr. Duru from Ahan Analytics with the market breadth. This is day number 3 of the US government shutdown. As I discussed in a short, the market does not care until it has to. You can see here on Swing Trade Bot, my favorite stock scanning software, all the trends are up long term, mid term, and short term. You can't get more bullish than this. And yet, I am going to point out some spaces of caution, of course. So let's dive right into it. My favorite indicator of market breadth is the percent of stocks trading above their 50-day moving averages, what I like to call AT50. For above the 50-day moving average measures the last, it takes an average of the last 50 days of stock prices, and it's a trend indicator basically. And what you're looking at here is my estimate of the overbought level is 70%. And whenever, according to my AT50 trading rules, whenever market breadth falls below this line or fails to break through it over some extended period of time, like now, it's bearish. And yet the market has defied this bearish sign for quite some time. So of course I'm becoming, more comfortable with this, but I just can't get over the nagging part, as many of you know who listen to these videos or watch them. Anyway, as I mentioned a week ago, market breadth has been wavering and it continues to waver. Although today there was an encouraging pop from, let's just call this 55% to 58% today. Now, unfortunately, there was a big fade from the high of the day around 63%. So the potential um, positivity that I could get from this is very muted. The downtrend is still in place for market breadth, and so this is why I'm just a little bit still wary. Not to mention all of the other macro and geopolitical factors that are just an ongoing um, point of concern. Let's take a look at the volatility index as another indicator to be wary about. Now, the market has had low volatility for quite some time. Actually, let me switch this to logarithmic so it's easier to read. And, this purple line here measures where volatility was right before the tariff drama, trauma, and noise took off. And I don't think it's any accident that volatility has pivoted around this line for many months to go now. Now, if you're looking really closely, and let me try to draw a line just to show you that there's reason to believe that volatility is bottoming out. So let me make the case. I'm going to do a curved line here. And hopefully you can see this sort of cupping that's happening where the churn is taking on a very slight upward bias and pressing against this purple line, which again has been the pivot. And what this means is that pressure, and hopefully you can see my cursor here, is building up. And ironically, it's building up at the moment when the Federal Reserve cut interest rates that was supposed to be a big celebration point. So what I see here is volatility index is pressing, 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 pressing against the top part of this cup, and eventually it's going to burst. Now, ever since the tariff drama, trauma, and noise, these volatility bursts have been very short-lived. I suspect the next one will be very short-lived because whatever triggers it the market is going to price it in very quickly as it's done all the other disruptions and dislocations. I suspect it'll be something related to the government shutdown. Again, these are just my guesses. I'm not doing projections. So, of course, I'm giving you all this information for educational purposes. Please invest and trade according to your own long-term trading horizons and goals. But if volatility does burst as a result of something that goes wrong or awry with this government shutdown, I suspect that that thing will push the different antagonists to finally compromise or come to some sort of agreement. This is all just scenario building. I like to have some sort of mental model in my head for what could happen in the short term. And of course, I think we have a Fed meeting later in October, so it could be that the Fed cuts rates by more than 25 basis points, it cuts it by 50 or more to respond to whatever the dislocation is that causes volatility index to go up. Anyway, the general concept here is that whatever forces the market's hand to sell off and cause volatility to go up, there will be a counteracting force to take care of whatever caused that dislocation to happen. That's my premise. I'm sticking to it. We'll see what happens in October. October, as you know, is the last of the most dangerous months of the year as far as drawdowns go. And typically, seasonally, October drawdowns and sell-offs and crashes should be bought, not feared. You should welcome them as an opportunity to buy. And of course, as always, I'll be writing about this, so I'll give my thoughts. If there's for some reason I think this time is different or there's some exception, I will write about it or post about it on this video. So of course, go ahead and subscribe to this channel if you want to get a timely notification. Share and like this content so the algorithm knows what's up. And if you have any feedback or comments, you can always put them down below. Okay, let's go to AT200 or the percentage of stocks trading above their 200-day moving averages. And let's just take a look at this longer term measure of market breadth health. And, this is also encouraging that the percentage of stocks trading above their 200-day moving averages. So again, this is for each individual stock, an average of the stock price over the last 200 days. It's a longer term trend. It's more indicative of a longer term investment horizon, whereas the 50-day moving average is more for traders. This is for investors, and you can see things look actually relatively healthy underneath the hood of the market. And it's churning, yes, but it's also churning in a way that's holding on to this support line that I have claimed has been pretty important. And this support line is where AT200 was when the S&P 500 hit its previous all-time high earlier this year. So that at least checks out pretty good. Let's dive right into the indices now. And let's, of course, look at the S&P 500. S&P 500 is doing well. As you can see, it was up every single day of the week, even though some of the days were marginal. First day of the government shutdown, the S&P 500 gained, what was it, 0.3%, hit a new all-time high, and we've had very marginal new all-time highs since then. Today was essentially flat, only a gain of 0.01%, but we'll take it as another up day. So we ended the week at 6715.78. Not much else to say here. The melt up continues. The market, like I said, you can see from the price action, just absolutely doesn't care about what's happening in the government shutdown. Same thing with the NASDAQ. NASDAQ just continued its melt up. Today was slightly down, down 0.3%, but still we had a new all-time high yesterday, Thursday. And overall, the positioning, in the NASDAQ is very bullish, well above the 20-day moving average and well supported by all the trend lines. 20-day moving average is the dotted line. The 50-day moving average is the red line. 200-day moving average is this blue line. And my favorite participants, IWM, which is the ETF of small caps, or the iShares Russell 2000, it actually had one of its most consistently good weeks in a while. It held this 20-day moving average support very well. Let me just zoom in so you can see that. It tapped on this trend line here over and over again. And actually, just to make sure you can see it, let me go ahead and draw a line. I'm trying to get better at this so you all can see what I'm talking about. I'm going to draw a big old fat line, and there you can see just uptrend, right? Up, up, up. And I don't like red because this is not a bad thing. It's a good thing. So let's put some green on there. And what do we like? Let's do a dark green so it's very obvious. Okay. Anyway, my whole point is that IWM even is having a very strong uptrend. It's holding 20-day moving average support, and it made another all-time high. I don't like the way it faded from its intraday high, but I'll take it. And I did have another successful week trading call options in IWM. Okay, let's jump right into the individual stocks that caught my interest. There was a lot going on, and I'm going to try to cluster them with some themes. Let's start off with Costco because I did a short on Costco a while ago, and it actually investors reacted negatively to Costco's last earnings report. That's ticker symbol COST, and it violated what I had proposed as being an important support level, which was this last close here back in July. So earnings for Costco dropped below this level, and I've pointed it out here. This was you can see I put this label close below 927 confirms short-term bearish conditions. So I have to assume that Costco is in short-term bearish conditions. And why is this important is because Costco is a massive winner over many, many years and decades, but the stock has gone absolutely nowhere for, let's call it a little over a year. So I'm always going to be very wary when a stock that's going nowhere starts to make bearish moves because it will be very easy for it to break down and create a topping pattern. Now, I'm not interested in buying or shorting Costco. I don't want to buy it because the valuation is so high right now, and I'm not going to short it just because Costco is a very favored. It's a favorite, what I call a star stock, and so it can pop at any time. So anyway, my point is that right now it's short-term bearish, so be careful, be wary, and if you're a long-term investor in Costco, you're probably going to have. I'm going to assume that you're going to have some opportunities to add to your holdings at slightly lower prices. Okay, staying on the consumer end, there's Etsy. Etsy just continues to blow my mind. I didn't even bother labeling this chart with all the different explanations for why it's just bouncing up and down so sharply. I will point out that since the last bottom at the beginning of September, Etsy has had a much more controlled uptrend. Yes, it's had some pullbacks, but overall, it is trending up. It surged 15.8% on September 29th. For whatever reason, it dropped right back 10.7%. I started to think that Etsy is just too dangerous to touch, and now it seems to be settling in back into its uptrend here. So hopefully, actually, let's go ahead and draw that nice little arrow just to make the point right here. You can see that. And actually, I didn't do the right arrow, but hopefully you can see that arrow. There's your uptrend just pointing up. If I pull back on Etsy, you can see that if this uptrend continues, it has a lot of room to run. That's why I keep it on my radar because I want to, at this point, now that it's broken out, it's in a bullish position, and I want to buy on some sort of dip, maybe back to the bottom of this uptrend, or hopefully to the bottom, of the 20-day moving average line, which I hope to use as support. All right, so hopefully that makes sense to everyone. Let's stick to stocks that have some implication for retail. FICO, I've written about FICO. This is Fair Isaac Corporation, ticker symbol FICO. I could have put some labels on here. Just know that the main narrative here is that the company has been under pressure from the FHFA, which is the Federal Housing and Financing Authority. I think that's, or it could be the Financing and Housing Federal Authority. I forget what the order is on the F's, but anyway, they oversee the more things like the mortgage market and so on. I think they report into Treasury. Regardless, the director of the FHFA has been very critical of FICO for months. And suddenly everything turned up roses. Yesterday, Thursday, the stock soared, I think, as much, well, it closed at an 18% gain. It was up as much as 26%. I actually was surprised that it soared so much, and I assumed that people had made the mistake of trying to short FICO, maybe, and this was a lot of shorts closing out. It managed to close the week with another 3.7% gain. All that to say is that what came up roses, I put the label in here so you can read it. The first news break was that FICO had some productive conversations with the director, and then later on, we learned that FICO will license its credit score directly to lenders and mortgage brokers and bypass the credit bureaus. Now, of course, this means that there were both winners and losers in this news. Now, the big winner is FICO. It's no longer in this bearish downtrend. It's broken. Well, you could argue it's still in a bearish downtrend, but at least it's above the 200-day moving average, which is this blue line. And it could get back to the good old days that I'm sure investors have gotten used to of just this nice long uptrend, long-term uptrend. I really want to get back into FICO now that things have turned, but I'm going to look for some sort of settling of the price action into support. Now, I said there were winners and losers. Well, losers are the credit bureaus. So let me step through two of them. One is ticker symbol TRU. which is for TransUnion. And sorry, my computer is running a little slow today. TransUnion, ticker symbol TRU, dropped, I think, about 5% on Thursday in in the wake of this news. Let's see if I was correct. No, sorry, it dropped 10.6%. And today it gained 5.2%, which I assume is a relief rally. Again, this is one I didn't even know TransUnion traded in the public markets, to be honest. So I have no opinion on whether I want to buy or sell this. I'm just noting that there were ripple effects from this good news for FICO. Similarly, ticker symbol EFX for Equifax. They also fell, not quite as much as TransUnion. They fell 8.5% and then also had a relief rally that was smaller than TransUnion of 1.9%. You can see with a lot of these stocks, Equifax has basically gone exactly nowhere since the beginning of 2021. So to me, there's nothing remarkable here. I forgot to pull back on TransUnion. Let's take a look at that one again. TransUnion has, I think, also gone nowhere for an extended period of time. And let's see if I'm correct on that. Yes, it's gone nowhere. Wow, it's actually gone. It's had wider moves up and down, but you can see TransUnion has essentially gone nowhere since 2019. So when I see these kind of stocks that have been churning for years and years, I just don't have an opinion. I mean, I'm not interested in buying them in the middle of that range. Now they get more interesting when they get to the bottom or the top of those respective ranges. Okay, so that is sort of on the consumer side or retail side of things. Let's go to now some more speculative and tech related stocks. IonQ, my favorite quantum computing stock, ticker symbol is IONQ, had a very picture perfect bounce from 20-day moving average support. Finally, I was paying attention. I was able to buy off of that support, and so I'm enjoying these next 2 days of gains. This stock is positioned to break out above this all-time high and move even higher. And if you need emphasis, I can also put an arrow on this one. Let's go ahead and stick with the big green arrows. So what I'm looking at here is for a resumption of this uptrend and to go follow on higher. Okay, up. That's what the implication is of bouncing off of very strong support in such a picture perfect fashion. Um, Kind of in the crossroads of tech and consumer is Meta Platforms, otherwise formerly known as Facebook, ticker symbol META. I have pointed out in a short before that Meta was looking kind of toppy. It would bounce soon after that and kind of violate or kind of basically technically claim that it's not topping out, but you can see here that it is dipping below this line. And let me explain what this big purple line is. It's where I pointed out there was a gap and crap. So gap and crap means the stock gaps up and then sells off immediately from that gap open. This was a new all-time high for Facebook, or sorry, for Meta, and it just looks suspicious. It's not a sign of strength, it's a sign of weakness. Meta did trickle down, but then it found very firm support at its 50-day moving average. And after earnings, it popped up above, starting with a healthy 11.3% gain. But ever since then, Meta has been lackluster and now weak as it's not only broken down below its 50-day moving average. And I could put a big old object on there as well, just to make it clear. Let's see, where is my circle? And there you go. So this is what I'm talking about. This is going to be green, but it's not a happy place. And right here, this is the 50-day moving average breakout. And then here is the break down below the 50-day moving average. And here's the break down below what was support and then became a pivot. And now Meta is in a short-term bearish trend. And that's partially uh, explains why the NASDAQ was a little weak on Friday. Meta fell 2.3%. It is now almost fully reversed all its gains from the last earnings, so that's not a good thing. And assuming this reversal completes itself, it could fall all the way back to 200-day moving average support. which would be a point which I'd expect a lot of buyers to jump in and grab their meta discount. Similarly, in the same space, we have Reddit. I really should have labeled the price action because this was very interesting to me. I completely missed this picture perfect buying opportunity when Reddit broke out post earnings by 17.5%. It just was so high and it was well above the upper Bollinger Band, which describes the one standard. I think this is defined as two standard deviations from the 20-day moving average. So that means it's very extended. And I just didn't feel like buying, but you could see that the buyers just kept buying and buying, buying Reddit until it finally took a rest, found support at the 20-day moving average, rebounded again. But now things are waning a little bit. And what happened on Wednesday was some claim that traffic from ChatGPT has declined. Um, from ChatGPT to Reddit has declined. I went in and did a trade on this because it seemed like one of those things that stocks quickly bounce back from because it's going to be hard to change people's minds about the bullish story that quickly. And sure enough, an analyst came out Friday. It took 2 days, but an analyst came out and responded with almost the exact opposite news. And Reddit bounced. And then I exited the trade because it was an options trade that expired today on Friday. So I was happy that worked out. It didn't have to, of course, but it just happened to in this case. And my thesis panned out pretty well. So I'm going to use that template in the future. Okay, Hood, ticker symbol HOOD, that's Robinhood. Again, this is in the space of retail, internet, digital economy. Um, long while ago, I claimed that Robinhood would perform better than Coinbase. I was right, but I was very wrong not to stay in Robinhood to see this moment. This stock has been such an amazing winner. Um, I was, I missed out on this nice test of the 50-day moving average. Let me again just put a circle there so it's very easy to see. And actually, yeah, let's go to a circle, and that is right here. So this is where the area I'm talking about. It held 50-day moving average support pretty well, and then it rallied from there. That was another spot that I should have and could have bought at. So now all I can do is just watch basically Robinhood continue to melt up and up and up and up to new all-time highs. Oh, and in fact, speaking of new all-time highs, the all-time high was another spot. Let me just draw a line there. In fact, a big horizontal line. This is going to be approximate, but because I think I'm drawing this from the intraday all-time high. But this was another spot. If you think about trading technicals, this was another spot that I really should have been very comfortable buying, given my trading rules. This was, and you can see that this breakout was very important because a lot of buyers rushed in. If you look down here, you could see the volume picked up. So that supported the breakout. And Robinhood soared 12.8% on the day. Sorry, I don't have a label for the news that helped drive that. But just from a technical standpoint, this is beautiful. That was like all hands on deck, buy, 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 buy. And you can see even buying at the end of the day would have been very fruitful as Robinhood has gained, what is this, almost 50%, even just from that breakout point, which was just a little over 3 months ago. So this, all lessons learned. I'm taking mental notes, telling myself, do not do not fall flat on your own trading rules. Again, I mean, it's going to happen, of course, but I just hate missing it in these particular cases. Okay. Now, Beyond Meat is the absolute reverse of this story. Beyond Meat has been a complete disaster. Last week, it announced a restructuring move that took the stock down almost to a single dollar. Actually, stopped at about one. The low was 123, $1.23. Sorry, this is Beyond Meat, ticker symbol BYND. But, and I'm assuming this is short covering because I know there's a lot of shorts in Beyond Meat. The stock has actually been rallying ever since that big down day. And sorry, I said last week. Actually, it started this week with this bad news, and buyers have stepped in every single day, almost to the point of erasing this entire gap down. So crazy as it sounds, if Beyond Meat could somehow close this gap and continue higher, that's going to be a very bullish reversal. I'm undecided as to whether I try to chase such a thing because I think this stock and unfortunately the business seems to be a disaster and not sustainable. But we'll see. I'm just going to keep this on watch. All right, I'm going to end with let's see. Yes, I'm going to. Nope, I don't have an end. I have two blocks left. Wix, which is ticker symbol WIX, Wix.com. It's web publishing. It has some AI features now that help make web publishing even easier. I never did find out why it collapsed so much on Wednesday, 13.4%. I had talked about how bullish it looked breaking out above the 200-day moving average. I never was able to make a trade on this because it just never separated from the 200-day moving average enough. It fell 13.4% on no news. And if you do know what the news is, please post it in. I looked and looked and looked. Maybe the news has come out since then. And it's trying to stabilize, but still sellers are dominating the trading action. You could see the negative trading volume. So now I'm looking to see whether the 50-day moving average can hold as support. If it doesn't, then Wix will be definitely in danger of falling right back to its post-earning low that it set back in August. I am in search of news catalysts on this one. And maybe this is another story where people are afraid that AI is actually going to take out a lot of the services for this company. HubSpot is also in a similar kind of vein. It fell in the same kind of in the same vicinity. It dropped, what was this, 10% and then another 6% as people were fearing that AI was going. I think this is another AI fear story. AI is going to compromise the business model for this digital marketing platform. So I'm just going to pull back so you can see HubSpot actually is another one of these stocks that has gone nowhere for quite some time. Let's just call it since the beginning of 2021. So it's not interesting from a trading standpoint because it's just in the middle of all this churn. But the news, the narrative is of definite interest to me. Similarly for for Atlassian Corporation, ticker symbol TEAM. So I think a lot of people just call it Team. It too had a rough end to the week. It fell alongside HubSpot and other stocks like it. It now trades at let's just call this a 52-week low. Let's call it actually a 14-month low. Team has also gone nowhere for quite some time. So I'm pulling this back. You can see it's gone absolutely nowhere since 2020. So it's again a stock that's just not interesting to me from a trading standpoint because it's not at the bottom or the top of this range, but it is very interesting to me from a narrative standpoint. I know it's a very expensive stock, its valuation is very high, but this is a very important software stock when it comes to collaboration software and for version control and knowledge management. So that's why I keep track of this stock from a narrative standpoint. All right, last but definitely not least, AI stocks have been holding up the market for quite some time. They really performed like champs during this government shutdown melt up. Let's go into my favorite of all the pick and shovel type plays for AI. Vertiv Holdings, ticker symbol VRT, made a major milestone this week, broke out above the prior all-time high and now, sorry, broke out above its prior all-time high to make a new all-time high. Very bullish move on strong volume. I'm loving this. This is my favorite AI holding besides the ETF THNQ, which sometimes is just called Think. But on an individual stock basis, I love this. They got another great endorsement on CNB Fast Money today. I noticed in just doing some searching that actually this stock comes up a lot on CNBC. No wonder the stock has done so well. But the story, assuming the AI story, the AI hype continues to hold, Vertiv is right in the middle of being a critical part of the infrastructure. So I love this one. I'm going to be looking to I'm going to buy more of this stock, assuming that this breakout holds to the new all-time high. All right, so let's continue to see another AI play. Oh, right, of course, Micron Technology. Wow, this one, I don't even know how to describe this one. I was fortunate that I got into the stock after earnings because I was watching like a hawk because Micron Technology, ticker symbol MU, had another bullish earnings report. The CEO is very bullish on its prospects, and yet people decided to sell the news. It was only 2 days. The stock stabilized, and I jumped right in. That's all I needed to see to just guess or guesstimate that the uptrend is going to resume. What uptrend are you may ask? Well, this uptrend, ever since the bottom of the tariff drama, trauma, and noise, Micron has been a very strong player. The valuation is still cheap, particularly cheap if the AI story, part of Micron's story, holds. I put in some labels here just to show some of the catalysts that are moving Micron. Oracle's big news. The NVIDIA Intel deal was good for Micron. This is before earnings. And then today, sorry, not today, on Wednesday, it surged 8.9%. And you can see buyers have continued to move into this stock. The only problem I have is that I wasn't aggressive enough. I bought a call spread, and of course that limits the upside on my trading position. But anyway, Micron is another one of my core trades or positions where well, actually, sorry, let me take that back. Um, let me be clearer. Sorry. Micron is a core trade in the AI, in my AI basket. I consider a stock like Vertiv, ticker symbol VRT, to be a core investment. And this is the distinctions can be kind of arbitrary, but I just wanted to make clear how I'm treating these stocks and how I'm allocating capital around these AI plays. Now, of course, I can't talk about any of these stocks without showing you the chart of NVIDIA, ticker symbol NVDA. Once again, NVIDIA has invalidated a bearish topping signal, and it didn't take long, and I'm not surprised it didn't take long because I called this double top subtle for the specific reason that I didn't think of it as a strong signal. It worked out for a very tiny time. NVIDIA stabilized by pivoting around its 50-day moving average and now is at all-time highs. So, NVIDIA is just the same old story. It's just going to keep going up. And that's just the way it is. I don't have a position in it now, and I sure didn't short NVIDIA based on that topping signal. I just like to watch to see how long it was going to take for it to invalidate. Now, another stock that I am invested in, I'm not trading around except for to sell call options against my position sometimes, is Dell Technologies. And Dell, unfortunately, it reversed one of the big days of gains. Dell Technologies is ticker symbol DEL. Sorry, I don't have any lines to draw here, but it still is short of its all-time high that was set back in 2024. It's still repairing itself. I thought of this stock as a great buy on the dips, and I'm just holding on. I've talked about how this breakout here above the 200-day moving average was a perfect buy signal. I added to my holdings here, and so far so good. It's worked out. Now, Dell was a big beneficiary of this week's AI strength. Unfortunately, and I don't know why I didn't look to see whether there's any specific news, but it reversed sharply starting with Thursday's small pullback and then a 4.5% pullback today. But I'm still bullish Dell Technologies, and all of the trend lines are holding up on it. So I am good to go on that one. Okay, that is all that I have. Again, I covered some of the retail space. I covered some of the internet space. I covered some um, digital marketing, digital advertising, digital collaboration, some housing market mortgage stuff, AI, and of course trading and food. Just to round that out. So if you have any questions on those sectors, of course you can put them down in the comments. Otherwise, I will check you out later. Thanks for hanging out this long and have a good weekend. Stay safe out there. I know this world is just hurling all sorts of crazy headlines at us. I appreciate you being interested in this stuff, even despite these bad headlines, and just try to hang in there, think positive, and we will hope for things to just work out for the better. Take it easy. See you the next time.